Hey, if you are a forex trader and you do not know how to trade the market by using a multiple time frame analysis, you are in a big trouble.
Please don't talk about me when I'm gone. Oh, honey, though our friendship ceases from now on.
Hi everyone, welcome back to FX Action Trader YouTube channel. I'm Chuan, and today I'm going to share with you how can you trade the market by using a multiple time frame analysis. If you have not subscribed to our channel, please hit the subscribe button and turn on the notification in order to help us to reach out more people with this video. So I'm going to show you 3 examples in this video, including how do I find market direction in higher time frame and how do I spot my entry method in the lower time frame. Alright, so let's get started. Alright, when we talk about multiple time frames, meaning that we are using more than one time frame to scale in for our entry. So I'll be dividing these time frames into the directional time frame and also the entry time frame. So for the direction time frame, I'll be using weekly chart, daily chart, or even H4 chart to determine my market direction. So for the entry time frame, I'll be using H1, M30, and M15 to determine my entry. So I would suggest that do not go lower than M15 because the lower the time frame, the more noise that market is going to give us. Alright, so when we talk about direction, this is pretty simple. So we have 3 kind of direction in the market, which are the uptrend, downtrend, and also sideways market. So very obviously, whenever we are in these higher time frames, we are looking for structure like this for an uptrend. This is the uptrend because market is doing market is doing higher low and also higher high. And we are also looking for structure like this when we are in a higher time frame. This is a downtrend structure whereby market is doing a lower low and also a lower high. And whenever market is traveling between 2 levels, which are the ranging market direction, we can see that price is bouncing off between 2 levels, which are also the support and resistance. So when we are talking about entry time frame, what we are looking for entry is either price action or chart pattern. The chart pattern can be a double top or a double bottom or even a head and shoulder pattern, or even price action confirmation like bullish engulfing, bearish engulfing, or even the dominant setup. Alright, so let us go to our first example on this pound dollar chart. Alright, so from this pound dollar chart, I'm going to use H4 and H1, these 2 time frame, to scale in for our entry. So whenever we are on the higher time frame chart, what am I looking for is I'll be looking for the overall market structure, but I'll be focusing on the most recent structure, which is over here. Alright, so this structure tells me that market is now currently in a downtrend. Why do I say so? Because we can see that market is keep on doing a low and also a lower high, and market keep on creating new low. Okay, so these are the criteria of a downtrend market. So we can use trend line as a guideline to remind us that this market is in a downtrend and we should be only looking for a sell trade. Okay, and if we add in support and resistance, we can also notice that these are the important SNR zone or the support and resistance zone that we should be taking note of. Alright, after we have marked this zone and we have identified the direction on the higher time frame, we can always go to the lower time frame. In this case, it's the H1 time frame to look for a valid entry pattern. So in the lower time frame, I will not take any buy trade or any buy pattern into my consideration, whereby I'll be only focusing on a short trade, or I'll be only focusing on a valid sell signal. Alright, so let the market keeps on going. Okay. So on the lower time frame, what we can see is that the market is temporarily in a uptrend condition. But we know that on the higher time frame, market is in a downtrend. So what we have to do is that we need to always respect what the higher time frame is doing. So in this case, we let the market keep going and we wait for a valid sell signal. All right. So we can see that. Let me delete it. So we can see that market is going to break this trend line and followed by a bearish engulfing candlestick. And if we look in details, we can also see that market has actually retested this level for 3 times. It's kind of a triple top pattern, and we can see that there is a weak rejection here and also a failed bullish dominant setup, and also market closed below this trend line with a very strong bearish engulfing candlestick. So combining all these confluences, we can do our entry as a valid sell trade. Let me place an entry here with a very strict stop loss above this high. Okay, and please bear in mind, we need to always have our ratio of 1 to 2 or even higher. All right, so let me see what if we have 1 to 2. So 1 to 2, because I'm going for instant sell after this after the closure of this bearish engulfing candlestick, and we let market to do the rest. And please remember, whenever we have 1 to 1 profit, you can either set to break even, or you can either move your stop loss to your entry level to protect your capital. All right, so let the market do the rest. We can see that whether our target is hit or not. All right, so our first target got hit. So this is how we trade in a trending market by using 2 time frames, which are the H4 time frame and also the H1 time frame. Let us go to the next example. Alright, so on the second example, I'm going to show you how can we trade a trend reversal by using a multiple time frame analysis. So on this $dollar H4 chart, we can see that market has now been in a very strong uptrend because market is keep on creating higher high and also higher lows. But if we look into details, we can see that market is now retesting the previous higher low structure at this level. So if this level was broken and market creates a new lower low below this level, we can confirm that market has now changed from an uptrend to a downtrend. All right, we are expecting market to show us something like this. This new low was created and market created another lower low that closed below this new low. So this is a confirmation of a downtrend market structure. So we can see that market attempt to break this previous higher low but failed and pull back, and market has now break this structure with a new low. So in this case, we can confirm that market is now no longer in an uptrend, but market has changed from an uptrend to a downtrend. So for this condition, we should only be looking for a sell signal on our lower time frame. And where should we look for the sell signals? We should always look for sell signals at the lower high for a downtrend, which means at this area. So if we go to the H1, we can use either price action or even chart pattern to identify for our entry. So let me add in this EMA 50 for this euro dollar. All right, so I'm either looking for a chart pattern or a price action like advanced engulfing pattern, or even a bearish dominant setup in order to step into this market for a sell trade. All right, so let us continue to see what market shows us. Even in the lower time frame, we can see that market is keep on creating lower low and also lower high. So in this case, any buy signals that market shows me, I will not take into consideration because I'll be only focusing on a sell signal. All right. So this is a valid sell signal because we have this engulfing pattern that closed below the EMA 50, and the middle candle of this engulfing pattern has the longest wick, and this is also my advanced engulfing entry pattern. All right, if let's say we take a sell trade at here and a stop loss just above the previous lower high, and we take 1 to 2 take profit level, and we let market to do the rest. Alright, so in fact this trade we can hit about 1 to 3, 1 to 2.9. So this is how we scale into our entry by using multiple time frame. And the benefit of trading this way is that we can always have the less floating in negative. Alright, so let me show you the last example for today. The last example I'm going to show is how can we combine multiple time frame analysis when we are dealing with a sideways or ranging market. So how can we identify a sideways market? So for example, on this H4 chart, we can see that market has likely to be in a sideways structure because we see that market has been in a very strong uptrend, but market failed to create a new high after this high, and market failed to create a new low as well. In fact, after this low was created, market closed back within the sideways structure. So we can assume that market has to be in a ranging condition until either a breakout or a breakdown in order to back to the trending market. So in this kind of market condition, how can we trade by using a multiple time frame analysis? Alright, so let us go through step by step. So the first step we need to do is that we need to highlight, or we have to identify the zone where market is likely to have the sideways condition. So normally we have to mark the high and the lowest point of the market structure. And what we can see is that, or what we have to take note is that we do not want to trade at the middle of the sideways structure because this is very dangerous. All right, we can either look for a sell trade at the top of the structure, or we can either look for a buy trade at the bottom of the structure. So what can we do is that we need to wait for market to retest this previous stop and show signs of, or show us some price action, either can be on H4 time frame or even H1 time frame, or show us some weak rejection, meaning that whenever we have rejection, meaning that market was unable to break through the previous higher high, or market was unable to break through the previous resistance zone. Alright, so let us keep moving. Alright, market is attempt to break this structure high. Okay, and we can see that market was unable to break, and we have one bearish engulfing candlestick. So this is not a very good, this is still not a good sign for us to go for a sell trade, but we are going to lower time frame to look for a better confirmation. All right, so this is the H4 zone, and this is, we can see that on the H1 market is still in an uptrend because we can see that market is keep on creating higher lows and also higher high. So what we have to wait is that we need to wait for market to either break the uptrend structure or show us signs of trend reversal. All right, so we just leave this uptrend trend line as a guideline, and we keep on moving. Okay, if you look into details, this is a very good sign for us to go for a sell trade, because what we have a head and shoulder, chart pattern here, and this head and shoulder chart pattern has broken the uptrend trend line. So this is the first confirmation, and we can see that market has retested this level for 1, 2, and 3. Meaning that after retesting for 3 times, market was unable to create a new higher high, or market was unable to break the resistance zone, and market is starting to drop to seek for more buyers. Okay, so whenever we have chart pattern like this, there are 2 options for you to put your entry. So you can either put on an instant execution, or you can always put a pending order at the neckline, alright, which is I used to put pending order at the neckline, so that we can have a better risk and reward ratio. Alright, so I'll just put the stop loss right above the head and shoulder pattern, and my ideal TP, it can be either at the center of the sideways structure, or it can be at the low of the sideways structure. So let us see what market do. Market retrace back, hit my pending order. Okay, so I believe that at this point I already have my 1-to-1 risk and reward ratio hit. So at this time, I'm going to move my stop loss into my entry price and let the market do the remaining, because market is still in a sideways condition and we do not want to risk our trade. Alright, you can either take profit whenever market reach the center of the sideways, or you can either set to break even whenever market reach the center of the sideways. Alright, so I believe that this trade we got a break even, and if you have set 1-to-1 take profit, you could have taken your profit at this level where we have a 1-to-1 risk and reward ratio. Alright, so guys, thank you for watching. I hope you learned something new from this video, and share to your friends and give us a like button if you find that this video is useful for you. Alright, so I'm going to see you again in my next video. Have a nice day.